Hello, everyone. Welcome to video 3 of chapter 8. Today, we're going to talk about identical properties. So often when we have assets or capital items, they're easy to distinguish. I have a machine that makes t-shirts, a machine that makes pants, a machine that makes shoes. So these three items are separate from each other. They each have their cost base. The thing happens when, especially when we're talking about corporate shares, this is most often used is when you have a series of shares, you could have thousands of shares, and each share is identical to the one next to it. They each confer the same right to income, the same right to votes. So it's hard to say, well, I paid $17 for that share and $13 for that share. It's an impossible thing to track. So what we do is we average the cost against all identical properties. Let's get into it. So identical properties are properties which are the same in all material respects, so that a prospective buyer would not have any preference for one over another. So we will have a weighted average calculation to determine the ACB. So for this example given here, an individual purchases the following X shares. They bought 100 shares at $12. They bought 150 at 14, another 75 at 11. So the question is, we can't know which individual share was $11, which was 14. All the shares are considered identical. So later we sell these shares for $20, or at least we sell 100 of them for $20. What was our outcome? What was our effect? So when we sell $100 shares for $20, our proceeds of disposition is $2,000. So our ACB, this shows it here. I have it on the spreadsheet. That might be easier to see. So I've laid it out here. So our total cost for those three transactions comes out to $4,125. That's the total amount we've spent. At the end of our purchases, we have 325 shares. So if we take our total cost and divide it by the total number of shares we have, we get an average cost per share of $12.69. The decimal keeps going, but we've rounded off the pennies. So on average, our shares cost $12.69. So when we sold 100 shares for $20, we sold this cost 100 times. So 100 times 12.69 is 1269.23 because we're catching a couple more decimal places. So we received $2,000. We paid $1,269.23. So our gain, our total capital gain was $730.77. So that is how identical items work. Whenever we have multiple purchases, we find their average price before a sale. After sale, maybe we buy some more shares and then we'll have to re-average the price. So let's go to that example. Miss Chantal Montrose makes frequent purchases of common shares of Comco. On January 15th, she purchased 650 shares at $23.50. On March 12th, she bought more shares, 345 at $24.25. On September 15th, she sold some shares, 210,000 at $25.50. On February 14th of 2024, she purchased more shares. And October 1st, she sold a handful of shares. So we have multiple purchases, multiple sales. What do we do? How do we deal with that? Well, we take it one step at a time, really. So for identical properties, we have our original transaction. On January 15th, we bought 650 at $23, $23.50 a share. So 650 times $23.50, we spent $15,275. On March 12th, we bought more shares. And on that day, we spent $8,366.25. For those who have the study book, the solutions I think are often given in round numbers. So I'm given the pennies. When you're doing the quiz, if you do the pennies or the round numbers, the result is your answer might be off from, say, the solution answer by $1, maybe two, but that's fine. On the quiz, we have a range allowance so that if you're off by a couple dollars, we assume it's due to rounding, you'll still get the mark. So if you want to round these to the nearest dollar to keep it simple, you can do that. I do the pennies because why not? So we spent in total $23,000, $23,641.25, and we have 995 shares. So on average, we spent $23.76. That's 23,000 divided by 995 gives us an average cost per share. We find out the average cost here because our next transaction is a sale and we need to know how much our cost base is. So on September 15th, we sold 210. We sold 210 and at a cost base of 23.76. That's our average cost base. So we are subtracting our cost of 4,989.61. This was our cost base. We subtract the cost of the shares that go out. This is the cost of the shares left over. So this 4,989 becomes the cost base in our capital gain calculation. When we sold the shares at $25.50, we received $5,355. That's how much money someone gave us. It cost 4,989 based on our average cost calculation. So we have a capital gain of $365. Inclusion rate of 50%. Our taxable capital gain is half that, 182.69 or $183. So that's our taxable capital gain in 2023 based on our transactions. So now this is our cost base moving forward. On February 14th of the next year, we bought some more shares, 875 for 26.75 each. That's a total cost of 23,406. We spent that money. Our cost base was already 18,651. So when we combine that, our new cost amount is $42,000. How many shares we had? We were left with 785 after our sale. We bought another 875. We have 1,660 shares. So if we take our cost, just to show you, 42057.89 divided by 1,660, that comes to $25.33 or 34 for the rounding. So $25.34 is our cost base. That's our average cost per share. So when we sell some more shares on October 1st, we sold 340 at an average cost of $25.43. That means we're reducing our cost by $8,614. That's how much of our cost went out the door. So that becomes the adjusted cost base of our next transaction. At $29.50, we sold 340. So someone gave us $10,000. 8,600 was our cost base. So our capital gain was 1,415. Our inclusion rate, 15%, which means we are going to report a taxable capital gain of $707.87, 708 if you want to round. So this is what we're doing with identical properties. Every time we make a purchase, we rebalance the weighted average cost per share, per item. And then when we sell the identical properties, we use that average cost to figure out how much our cost reduces by. That reduction is the cost base of that transaction. The textbook also goes into partial dispositions. Do we have a slide on it? Yeah, I'm going to get partial dispositions out of the way as well. Sometimes maybe you bought something and you don't sell all of it. So we sold a piece of land that was 500 hectares. We sold only 200 of it. So what we do is we figure out, well, what it cost us 600,000. We need to find the portion of the cost that was sold. So 200 of 500 is 40%. 40% of 600,000 is 240,000. So that's the cost base of our sale. We held on to 60% of the land. We sold 40%. So our cost is going to use 40% of the amount. So just to look at that transaction, 600,000 was our ACB. Sorry, put that back to 4. 40% was 240,000. So our proceeds of disposition, does it say in the example? I don't know if it says. I think it says in the textbook, but so the proceeds, let's say we received $300,000. So someone paid us $300,000 for 200 acres. Those acres cost us 240, so we have a capital gain of 60,000. A taxable capital gain of 30,000. This is a reasonable calculation based on land size. The only thing is, what if what they purchased wasn't valuable? Let's say I owned a farm. I bought this because I wanted to farm it. I bought 500 acres. Some of it's farmland, but it's interrupted by bits of forest and bits of swampland. So we have swampland, let's say 70 acres. I don't want the swampland. I just bought a square of land and there was some swamp on it. So that portion was not valuable to me. The money I spent was for the rest of the land. So you can reasonably argue that a certain amount of acres had $0 of cost. So if someone paid us $300,000 for, and included in the land they bought was that 70 acres of swampland, we can say, well, 100,000 of it was for the swampland, so that's purely gain. And then we would portion the rest. Well, if 70 acres was swampland, then really it was 130 of the 430, right? The 70 acres of swampland's not really in our consideration. So now they actually purchased 30% of our cost, not the full 40%. And we could do that calculation too by figuring out, well, our new cost base is 180,000. So 300,000 minus 180, that capital gains 120, not the 60. So we can make these arguments. I don't think, off the top of my head, I don't think we throw partial dispositions at you, not to make it confusing, but you will definitely see calculations of identical properties. So please understand how this transaction's going. Okay. Thank you very much. That was identical properties, some partial dispositions, and so if you have any questions, always feel free to email me, and I will see you in the next video. Thank you.